Hmm. Hmm. $5? $100? Wait, this is not my money. This is my wife's money. It's Australian. Foreign currency, you know? Just like investing. Huh? Investing? Yeah. Investing is like a foreign word to many of us. We just don't know how to do it, where to start, how much money to do it, and where to go. Because we weren't taught this in school. Yeah, today we're going to talk about where to start your investing journey. But first, how to invest your first $100. I'm going to show you where to start, what to invest in, and how I got started. So stick to the end of the video to see how I started and see what I learned from those mistakes and what I learned to doing better today. So let's get started. Welcome. Hey guys, my name is Steve Cummings. I run the Frugal Expat website where we try to teach people how to save more, invest better, and to travel more. And doesn't that sound great? All right, so today we're going to talk about how to invest your first $100. Now, the first thing is with investing, you are taking a risk. You are putting your money into something and hoping it grows. Now, this is not considered a gamble. Some people may think investing is gambling. Well, I say it's only gambling if you don't know what you're doing and you're putting in something and you're hoping for $1,000,000 in like 1 or 2 years. That is like a gamble. It's like going to the stock machine, ching 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 ching, and you are hoping that you hit it rich on one of these things. Today I'm going to show you guys how to invest simply, and hopefully it grows your money for the long term, and you continue to invest more and more money and grow that wealth. So first thing first is to open up a brokerage account. And you can open up brokerage accounts in many different places. One of my favorite places is M1 Finance. M1 Finance is a great place that has some good user experience. You can start investing with just $10 and you can open up a portfolio and create your own portfolio, adding any different stocks or ETFs or any type of things you want to add in that portfolio. So this is just one of my favorite places because it's very user friendly and it helps out beginners. You can automate everything and buy fractional shares. Another great brokerage account would be Fidelity. And Fidelity also has fractional shares and you can automate your investments. This is another great brokerage account you can open. It's got a great user interface, not as good as M1 Finance, but it is pretty good. So if you want to go that route, you can open up a Fidelity account. And our third brokerage account on this list would be Vanguard. Vanguard is like one of those OGs, you know, the classics out there. They started the index fund in 1975 with John Bogle. Now they have been slow to adapt to a lot of different things. Their user interface is getting much better, but they don't have much automation unless it's automated into their mutual funds. And you can buy fractional shares of their ETFs. Not of any other stocks, not of any other ETFs, just the Vanguard ones. So those are three great brokerage accounts you can start off with today. So if you have that first $100, well, open up a brokerage account and then let's move on to where we can invest it. There are many different types of investments you can start investing your $100 in. You can invest in real estate. You can invest in stocks, bonds, maybe a business, maybe in yourself. These are just different places you can start investing with. Now, one place I suggest, this is my opinion, is to invest it into ETFs. Now, an ETF is an exchange traded fund, which is like a basket full of just different stocks. Now, many of these ETFs can be actively managed, so fund managers create it, or you can buy an ETF that tracks an index. So Vanguard has one called VOO, which is the Vanguard S&P 500 Index Fund. It is right now the second largest ETF on the market. If you have an ETF tracking the S&P 500, it will have the top 500 companies on the US stock market. This is good news because you now own a piece of Apple, Microsoft, Tesla, Nvidia, Berkshire Hathaway, Home Depot, UPS. There are just so many different companies. Like I said, the top 500 in the US. And that's great news to you because now you can start investing in the US market and have a piece of 500 top companies. Now today we're going to go over a couple different ETFs that you could choose from. Here are my top 3 categories. Number 1 is going to be a total stock market ETF. This means it tracks the entire US stock market. My favorite would be VTI. VTI is the Vanguard Total Stock Market Index Fund ETF. That means if you can't figure out what stock to pick them all. And that's what VTI is. It hosts 3,654 different companies. Now that number fluctuates up and down depending if companies go bust or companies rise up. So you have at least 3,500 different companies. Maybe it goes up to 4,000, maybe it goes less. But this means you have a piece of the US stock market. So if you believe in the USA, like I do, then you can have a piece of the US stock market. Number 2 would be dividend ETFs. Now, a dividend ETF is a ETF that consists of a lot of different dividend paying companies. Now, you may wonder, what is a dividend? A dividend is a portion of the profit that a company creates, and it doesn't know, the company is trying to figure out if it can invest that or not. And so what it does is if there is nothing that they can invest that money into, they will give a portion of that money to their shareholders. This is called a dividend. And people like these dividends because it's like an income coming in and out. And as you get older, maybe you're looking for more income coming in, and maybe you're thinking, Social Security won't be around. Why not I create my own Social Security through these dividend stocks or dividend ETFs? Now, these companies are also quite stable. They've been around for a very long time. Coca-Cola, been around a long time. They pay a dividend. Apple is now paying a dividend. Microsoft is paying a dividend because they've been around a long time and they're paying their shareholders some of the portion of the profits. A couple of my favorite dividend ETFs would be DGRO, VYM, VIG, and SCHD. One of my favorites, if you're looking for a good dividend ETF, would be SCHD. SCHD is the Schwab US Equity Dividend ETF, and it tracks the Dow Jones 100 Dividend Index. So it's got about 100 different dividend companies that are part of it, and the yield is 3.64%. So if you put $100 into SCHD, you will get $3.64 as your dividend. Now these dividends are sometimes paid out quarterly, and SCHD is paid out quarterly, so you split $3.64 4 ways, and that will be your dividend for the year. Now, you can also reinvest this and add more and more shares, and when you want to retire, you can then just collect the dividends as a check. This is just a great way to create more income. Now, it's a little bit more conservative than the total market index fund, and our next one will be a growth ETF. Now, a growth ETF is a little bit more risky than dividend ETFs because it has growth companies. Some of these companies haven't been around long enough, and some of these companies are consistently putting all their profits into growing their companies bigger. Google was once a growth company and still is. Meta is a growth company. Apple is still growing, and Microsoft, these are all different growth companies. And they have big upsides, and sometimes they have big downsides. So it's got a little bit more risk. Some of my favorite growth ETFs would be QQQ, VGT, VUG, and SCHG. These are all different growth ETFs, and they track different indexes. QQQ, for instance, tracks the NASDAQ 100, and it is a great suggestion if you're looking to add a growth ETF into your portfolio. Now, like I said, it's a little bit more risky. You have some bigger ups and bigger downs. In 2022, QQQ lost 32%. That's a big drop. But in 2023, QQQ went up 54%. That's a big up. So you have big ups and downs, but as you can see, over the last 10 years, QQQ has averaged 18%. Now, past returns will not guarantee future returns, so do a little bit of research, but this is a great ETF if you're looking for a portfolio to grow over the long term. So buy and hold for the next 10, 15, and 20 years. Now, those are 3 great ETFs and categories you can choose from. And like I said, we also have some great brokerage accounts you can open. Now, at the beginning of the video, I said, we'll see what I did in my beginning. But if you like this content, please hit the like button and subscribe. And we will continue to create more and more content like this to help you save more, invest better, and to travel more. Now, on to my experience. In 2016, I started my investing journey, and I started with money like $100 to get it started. I started with a robo-advisor called Wealthfront. Now, Wealthfront, you need to start with $500, so it's a little bit bigger jump to get into, and they separated my money into about 6, 7, 8 different ETFs. Now, that's a lot of different ETFs, and after learning a little bit more and getting a little bit wiser, I decided, this was not for me. I could do this better myself and put most of my money into VTI. I opened up a Vanguard account, put all that money into VTI, and just kept it going. The more and more I add, the more my money grows. So that's just a little bit about me. So now it is time for you to start your investing journey. Start it today. All you need to do is open up a brokerage account, put that $100 in, and buy maybe a simple ETF like I did, VTI. But those are just my opinions and suggestions. If you have any comments, please leave them below. Let's continue to increase this financial journey you are on. Until next time.